Greetings all, it is Max, and we are back. And I know I don't do very many videos over on this channel. I save it. Save it and savor it for those things that are really important, okay? Really important. Because every time this time of year rolls around, it's tax time, okay? Now, don't take anything I say as tax advice and just assume I'm lying and all of the yada, 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 okay? All right. Now, taxes as it pertains to cryptocurrency, all right, guys, is no different than any other property that you own. You only pay taxes on things when you bring them into fiat currency. Why is that? Because the IRS only has jurisdiction over United States fiat currency, guys. That means if you buy coins and you hold on to them, you don't owe any taxes. Regardless if the coin does a 50x, you do not owe taxes until you sell and you make profit. What does this mean? It means you buy $1,000 worth of whatever shitcoin out there. It does a 50x. You got $50,000 equivalent worth of whatever shitcoin it happens to be. If you sell all of it, you owe taxes on $45,000 worth of shitcoin. If you only sell $5,000 worth or $1,000 or however original amount of money that you put in there to begin with, you don't owe anything because it's your initial investment. And your initial investment money you put in has already been taxed. This time of year, especially with the market not being very good, we got a lot of these miner guys out here that don't have content, and they're good dudes, all right? But they all do a crypto taxes mining show or whatever that really demonstrates how little that they know about how taxes work, okay? There are no crypto tax laws, really, guys. There really aren't. There was the determination made that Bitcoin and cryptocurrencies should be treated as property, and that's really the only clearing up that we have about what these things are. What these miners have been doing is if they mine, say, an Ethereum a week, they've been paying taxes on the Ethereum as they get it and what the value of Ethereum is. That makes no sense, guys. Let me equate it like this. Let's say that these guys aren't crypto miners. Let's say that they're potato farmers. This is the same as you growing potatoes, and as you pull the potatoes out of the ground, you're paying taxes on potatoes. That doesn't make any sense, guys. That doesn't make any sense. You're not sending potatoes off to the IRS, okay? When you make potatoes. And there's an article here about staking rewards. This is like taking your potato, okay, and putting it in the ground and growing more potatoes. You don't owe taxes on that either. Okay, guys? Now, when you mine, all you are doing is adding bits of code to a program. Explain to me anywhere in the IRS tax laws where that is a taxable thing. Adding lines of code with your crypto miners and with the energy and the graphics cards or the ASIC miners, where you're adding lines of code to the Bitcoin network, to the Dogecoin network, to the Ethereum network. You're adding your own lines of code, and as a compensation for that, you are getting a piece of the work that you did in the form of a coin or a token or whatever. How is that a taxable offense, guys? How? Now, when you take your coin and you want to cover your costs or you want to go on vacation, you take your coin and you go up to the exchange and you sell that for US dollars. Aha! Now you have a taxable offense. Right? Proof is in the pudding. Now just look at it, guys. See, these guys, all of the people, you know, Seb and Red Fox, they're all fine people and fine channels, and they're doing their thing. But they do these tax shows, and they steer people completely the wrong way as when it comes to taxes. And this is why I have to talk about this stuff, because these guys are probably the most popular for home miners out there, for people to watch and what you're supposed to be doing. And no, it's completely wrong. There's only and they're going to say, well, they use TurboTax for crypto or something. You know, guys, let me explain. There's no crypto tax laws out there. So how does crypto TurboTax determine what goes in their program? They determine it by the $29.95 that they sell it to you for, because they're not on the hook for anything and they want to sell a product. And the people who are actual experts in the crypto field and taxes and all of that, there's about a dozen of them in the country, in the United States. And those guys all work for the exchanges. They don't work for you. So you have to do the best that you can in navigating this. So I'm going to explain things nice and simply as to what cryptocurrency is in relation to fiat and the Federal Reserve dollars and the IRS and all of that. Okay? Now, if it wasn't clear enough, mining cryptocurrency is like growing potatoes. Okay? Potatoes. You mine or you grow your potatoes, and you're not sending a portion of your potatoes to the IRS. Nor should you be sending a portion of your crypto, which is coming. You'll be allowed to do that and pay your taxes in crypto to further blur the lines to say that whatever cryptocurrency you have is Federal Reserve dollars. It is not. But these guys think it is. These guys, they don't have any idea really what crypto is. To them, it's just dollar signs. They assume, they put power and they take care of a mining rig, and for them, it gives them Federal Reserve dollars. They don't see the actual coin in there. They don't actually see that you're actually having a cryptocurrency, because they want the US dollars. They do not care about the Bitcoin. They do not care about the Ethereum. They don't care about any of that stuff. They want the fiat. So that's how they treat it. Okay, and that's how a lot of these guys treat it. They get into mining because it pays 10 to 1 off your energy, and to them it's a money printer. There is no greater idea of cryptocurrency and an idea of building the future or any of this stuff. Nope. We're going to treat cryptocurrency as though you're printing Federal Reserve dollars. So they're of the mindset that when they mine and create some Ethereum or create some Bitcoin, that they got to have taxes on that, because they look at it like a paycheck. They look at it like a paycheck from their job that gets taxes taken out. And that's how they do it. And that's what they're telling other people. And it's wrong, guys. It's wrong. Wrong. Nashville couple sues IRS over Tezos staking rewards tax. Why is this? Okay, now, the case got thrown out of court because the IRS refunded their money and wouldn't go to court on it. But what it was this couple, they purchased cryptocurrency, and then they staked it, and they looked at the rewards they were getting for free as being taxable as income. Okay? They looked at it as income. This is the same thing as mining, guys. They looked at it as income, so they started paying taxes on what the value of their staking reward was in US dollars. They're doing the conversions for the IRS. They're doing all these things. And it's like, why did they do that in the first place? It's idiotic. But they said they realized that their staking rewards off their Tezos was just like them taking their potato that they grew themselves and putting it back in the ground and making more potatoes. That's what staking is. Okay? That's what it is. There is no taxable event anywhere in that. Anywhere. Just like when you mine cryptocurrency, there is no taxable event anywhere in there when you receive rewards from that. Now, there are circumstances where people go to unmineable, and they go to these things where you're mining a cryptocurrency and then you're paid out in something else. And that could be a taxable event, guys. It could be, because somewhere in there, there's probably a switch over to US dollars. When you sell a cryptocurrency for another cryptocurrency, there is a transaction there where at some point it's hitting US dollars, and you have to owe taxes on that. I'm not talking about that. I'm not talking about trading. I am talking about mining and tax obligation in mining. And once again, guys, I am not a tax attorney. I am not a tax this. I'm not a tax anything. I'm just a guy who understands what property is. And if the IRS has the legal authority to tax crypto that you mine. They have the legal authority to tax your garden. Okay, they have legal authority to tax the picture that you painted. They have legal authority to tax everything in your life and every single thing that you do with your own energy. But that's not the way it works, guys. They have the right to tax things that are involved with Federal Reserve notes. And if you're not touching Federal Reserve notes, they don't have a thing called jurisdiction. Nashville couple sues IRS Tezos over staking rewards tax. Couple in Nashville has filed a lawsuit. The IRS over tax they paid on rewards for staking Tezos. Josh and Jessica Jarrett are requesting a refund of income tax paid in 2019, totaling $3,293 for the receipt of 8,876 tokens, according to a legal complaint shared by a spokesperson. The Jarretts are also seeking $500 increase in tax credits lost. So, what they did was the IRS cut them a check and refunded their money, and then the court threw the case out because these people no longer had a loss. They weren't suffering a loss anymore because the IRS just gave them their money back. And the people wanted to not accept the money because they wanted to take this to court so that they could have clearance and they could have, a legal precedent, right? They wanted to have a legal precedent in there that staking rewards are off the table as far as taxes. Well, there's no point. There's no point, guys, because staking rewards were never taxable. Everybody knows this. The IRS isn't going to tell you that. The IRS, they pay as many taxes as you want to. Pay all the taxes. They don't care. Do you think that they're really going to send you money back if you overpay on your taxes? You're using like a turbo tax or something like this? No, they don't care. So, being the fact they refunded the money and they don't want to fight about it, guys, it just upholds the fact that cryptocurrency is property treated no different than your potatoes or your dogs or cats or anything that you have. Your dog happens to go out there, run around the alley, and you get some puppies going on. Do you pay taxes on the puppies? You pay taxes on the puppies when you sell them on the newspaper. When you sell them for a couple $100 a piece, then you should pay taxes. Yeah. But just the very act of having them? No. And I hope people out there understand what I am talking about and do your own research and look at this and ask a tax guy. If cryptocurrency is property, wouldn't it be treated like a potato that you grew? And if they have any clue of what they're talking about, they'll say yes. And understand, there is no tax professional crypto experts out there, guys. There isn't any. There are starting to crop up some firms here and there, but most of them are doing it wrong if they're telling you to pay your taxes on your staking rewards. If they're telling you to pay taxes on crypto that you mined and never sold and brought into fiat, they're doing it wrong. How do you know? Because stock market doesn't even work like that, guys. If you bought $500 worth of Tesla and Tesla doubles in price and you don't sell your Tesla, how much taxes do you owe, guys? Nothing. Do you get it? When do you owe taxes on that Tesla stock that you bought? When you sell it. And you only owe taxes on the amount that's over what you initially invested. You buy one share of Tesla stock. Before you could buy, now you can buy fractional shares, but before you could only buy one. You buy one share of Tesla stock. It doubles in value. You have to sell the whole share because that's how stocks used to work, right? So now you owe taxes on that 50% gain or that 100% gain. You buy cryptocurrency. You buy a Bitcoin. You buy a Bitcoin, Bitcoin doubles. You sell only the amount that you paid initially. You don't owe any taxes. If you sell the whole Bitcoin after it doubled, then you owe taxes on the amount that you gained. If you just hold on to stuff, there is no tax, guys. If you hold, there's no tax. This is why a lot of people say hold. Buy stuff, be an investor, and hold. And hold and hold and hold. And that is because there is no tax obligation until you sell. Why miners? that don't know what they're talking about insist on making tax shows about how to pay crypto taxes and this and that. I don't know. But it's really grating, because the whole idea behind cryptocurrency in the first place is to not have to use the Federal Reserve dollars, because it's a corrupt system. It's a mafia. And if you don't use the Federal Reserve dollars, there isn't a tax obligation. That's the whole point. But if you're these guys who just think that they're printing fiat, they think they're printing fiat because that's all they see. And they don't do trading. They don't understand a lot about the protocols. Some of these guys, they went to the Bitcoin conference and they never understood what Bitcoin was until they went to the conference, and they've been mining for a couple of years. It's like, well, to these guys, it's just money printers, just fiat printers. And that's why they're wrong about the tax thing, because they're treating whatever they mine as though they are printing literal Federal Reserve dollars. That's what they think, regardless of what they're doing. And that's what they're telling people, I pay taxes as soon as I mine it. The day I mine it. It's like, okay, whoa, slow down there, buddy. And I'm like, I'm betting that you don't claim your losses if you mine it and then the price goes down. I bet you don't claim the losses. Well, maybe you do. But it would be pretty silly. You're wrong in both cases. Okay? Cryptocurrency is property. Cryptocurrency is property. Say it with me, guys. Cryptocurrency is property. No different than any other property that you have. Do you believe that Ford Motor Company, when the car rolls off the assembly line, do you think that they pay taxes on that, creating that Ford? No, because they created the Ford car. They pay taxes when they sell it to the dealerships. That's when they pay taxes, guys. It's no different in cryptocurrency. No different than growing potatoes. You don't pay taxes on your potato until you bring it to the farmer's market and sell it. What's also interesting, which I'm not going to cover, is what about when you say take your potatoes and you trade it with the other farmer who grew apples, and you're not hitting Federal Reserve dollars? I wonder. Well, I know how I personally go about that and how I see it. What do you guys think? Anyways, rant is over, and that's what we have to say about that.